Good evening, it's Doc Severson for the TheoTrade video for Tuesday, April 4th. Okay, let's start by looking at the S&P 500 with the monthly on the left, weekly in the middle, and the daily chart here. And so what I'm seeing on the daily chart is that the price is really in this small little flag pattern, although you could also say this is more of a pennant as well too. So a pennant is where you have a short-term triangle type of pattern here. So you can see that this is perhaps coming into the apex here. And the reason I say that is because the price seems to be supported by this moving average. I'm not a huge fan of using moving averages as support, but if the price is respecting that moving average and using it as support, then I have no choice but to do that. So right now it seems like we're printing perhaps higher lows here, but still a lower high, which means that we're vectoring into the apex. Right now, based on just the empirical evidence here of trend on the monthly chart, trend on the weekly chart, both being severely to the upside right now, you'd have to give the odds as the favor to an upside breakout from this triangle, just as a mean reversion, but I still wonder how much potential that would have given this exhaustion signal down here, which is a major one, especially with the weekly one as well down here too. What I'm still expecting to see is the price pulling into a larger range down here, slightly deeper than what we've already cut out just in the last couple of weeks. We are seeing that chop that I expected, but I expect it to go down just a little further from here. The liability is that if we do see the charts try to break out higher from here, that may be a failed breakout that may end up with kind of a throwover, and then we ultimately do see those lower prices. I do believe that institutions will sell into any retail strength trying to attack this breakout. Now, the reason that I like to see prices going just a little lower in the near term is not only because of the fractal energies that I'm showing over here, but also just the fact that prices are threatening all-time highs right now, but fewer stocks are supporting the move. This is an indicator called the SPX A50R, which is the percentage of stocks above their 50-day moving average. Right now, we're only sitting at 56% of the S&P 500 is above the 50-day moving average. Again, there's that 50-day moving average again. Can't seem to get away from it. But we have seen this movie before. Probably the best example of this was back here in 2015 when it seems like the market could do no wrong whatsoever, but was not going anywhere, similar to what we're seeing right now. Very close to all-time highs, and actually had a bad couple of days here in August of 2015, right? So we can see how this can change, but it's this divergence that concerns me here. And every time we've seen this level of divergence show up with the price near all-time highs, but fewer stocks pushing above their 50-day moving average. So we're sort of seeing this underlying weakness with all the money just being attracted towards a few. So let's talk about the few for a second. Now, I can actually set my chart up here with a ticker that's Amazon plus Apple plus Microsoft plus Google plus Facebook plus Netflix. And maybe I could add even Tesla onto that now, although Tesla was dead money for the last 2 years. So we're seeing this completely parabolic rally, although I have to respect it because there is structure behind this rally. It's not going straight up. It is consolidating, breaking out from consolidations. It is consolidating like in big ranges over here, in big ranges coming along. So if we could create this sort of virtual ticker here and examine this, and note that, yes, even when we start to see this combination of stocks showing exhaustion, especially at a larger time frame, we will see some corrective price action. So every time that we see a major exhaustion level, we will see corrective price action coming on board, right? So this is corrective price action. This is a deeper range that's showing up. Okay, one more time. When we see heavy exhaustion from this, we will see corrective price action. There's a high probability of seeing this corrective price action when we get down to this level of exhaustion on this combination. Are we there yet? No, we're not there. It's actually doing a good job of kind of stair-stepping higher in a very incremental form. But the strength has just been incredible and persistent. So the money's been flowing into this combination of stocks right now. But when we get to this level where we start to see this down here, then this is where we need to be very, very cautious. And the Nasdaq then becomes a very attractive short, at least in the short term, for that to create a larger range. Again, we're not looking for a big sell-off. We're just looking for corrective behavior that will show up on any chart. I don't care which chart it is. Eventually, these things have got to find a new set of buyers at a lower price level. All right, folks, that is it for tonight's report. Thanks for listening, and we'll see you tomorrow.